Bitcoin surges back above $91,000 as support builds in $80,000 to $85,000 area. Helping the mood in crypto were moves by institutional giants Vanguard and Bank of America to open up digital assets to their clients. Bitcoin BTC $91,585.04 surged back above $90,000 during Tuesday's U.S. morning hours, erasing most of its steep plunge from Sunday to Monday to below $84,000. The largest cryptocurrency was recently trading at $91,180, up 8% over the past 24 hours, helping lifting the broader digital asset markets. Ethereum's Ether ETH $3,019.24 bounced above $3,000, gaining 9% during the same period. Large-cap altcoins also followed the advance. XRP $2.1779, Solana's SOL $139.75, DOGE $0.1466 were up 7% to 10%, recovering from their recent lows. The gains occurred as $11 trillion asset management giant Vanguard dropped its long-standing fatwa against crypto and will now allow its clients to have access to digital asset ETFs. Alongside, Bank of America has given the okay for its wealth managers to recommend a 1% to 4% allocation to the spot Bitcoin ETFs. Mark Connors, founder and chief macro strategist of Bitcoin Investment Advisory Risk Dimensions and former global head of risk advisory at Credit Suisse, warns that a rise in Japan's 10-year yield could pull capital away from global markets, with crypto, especially Bitcoin, being hit hardest due to its proximity to Asian capital flows and exposure to leverage. Binance, which handles nearly half of all crypto volume and allows leverage of up to 50x, is particularly vulnerable to yen and yuan volatility. Connors also pointed out that Bitcoin appears to be leading the S&P 500 lower. That pattern could continue until both the Federal Reserve and Bank of Japan hold their policy meetings later this month. If markets weaken further, he expects some form of intervention, as has often happened during periods of stress in recent years. Still, not all signals point to weakness. Jasper DeMare, desk strategist at Wintermute, said Bitcoin derivatives show a clear lean toward bullish, short vol behavior. Traders are selling downside puts around the $80,000 to $85,000 level while selectively buying upside further out. The mix suggests a market that treats $80,000, 85, 000 as supported and is comfortable leaning long into year-end while earning carry on the way, DeMare said. In other words, despite near-term pressure, traders appear positioned for a recovery. Read more on Thin Ice, Crypto Daybook Americas.